Good afternoon, everyone, and welcome to this very important session on CSR reporting. Every weekend, on every Saturdays, we are conducting a session on CSR so that we can update the members on the important developments that are taking place. Today, we have with us Dr. K.K. Upadhyay. He has conducted several trainings and is widely respected and seasoned development professional. He has over 4 decades of experience in government, NGOs, academics, and corporate. He has pioneered innovative and outstanding social enterprises like Safal, Apni Yojana, Bastar Integrated Development Program, and Health of the Urban Poor. Dr. Upadhyay had been a pivotal part of the CSR journey in India as a thought leader, practitioner, and former head of the FICCI Aditya Birla CSR Center of Excellence. He is an expert with the Indian Institute of Corporate Affairs. He is on board of several non-profits, including National Trust, National Population Stabilization Fund, UN Global Compact, DNR Foundation, and International Institute of Boat Management. He contributed to the sector through several publications and research studies for USAID, UNIFEM, and IIED London. He is a certified trainer with ICAI, and as a part of his individual social responsibility, he works closely with the student community, corporates as a motivational speaker, trainer, and executive coach. With this short introduction, I welcome Dr. K.K. Upadhyay. Welcome, sir. And before we start our session, I request our chairman, Satish Gupta ji, to give a welcome address to the members. Satish Gupta ji, please.
Thank you, Sonali madam. Respected Dr. K.K. Upadhyay ji, eminent speaker of this session, and Sonali madam, who is the secretary of the CSR committee of the ICAI, Nikita Dhingra ji, CSR committee of the ICAI, and my dear friends attending this webinar, rather VCM. Friends, at the very outset, I welcome Dr. K.K. Upadhyay ji, eminent speaker of the day. I welcome you all for sparing your valuable time for this VCM. Friends, we all know that CSR is not new to our country. Rather, I can say that corporate social responsibility may be new, but social responsibility in our country is not the new concept. We all know that in ancient time, rather I can say even some centenary back, if we see the schools, the hospitals, the water resorts, that other dharmsalas and other charitable projects were being taken care of by our industrialists, our trades and businessmen. So it is not new, but since our country is the first country who made CSR provisions mandatory to be applied for certain types of companies, we must be aware that if any company has net worth of rupees 100 crore, turnover rupees 1000 crore, or net profit of rupees 5 crore in the preceding year, then that company has to follow certain provisions of the Section 135 of the Companies Act, read with some rules and the Schedule 7, and has to spend 2% of average profits of 3 years, preceding 3 years, for the objects listed in Schedule 7 of the Companies Act. So, friends, this provision has been made mandatory by the Companies Act 2013, and India is the first country to make it mandatory. But, friends, I want to speak about the opportunities of the profession of chartered accountancy in the CSR. And you believe me, friends, that if we read the Companies Act, we think of the company audit only. we think of several other reporting only. But just go through this section 135, certain rules and schedule 7, then you will find that there are several opportunities. And if we extend this CSR to the environment, environment follow up, or I can say there are several opportunities for our profession, whether it is pollution control, whether it is carbon credit, whether it is climate change, and the things we are going to face environmentally, not only in our country but through the entire world. So we will find that there is a big opportunity for our profession. And I'm just trying to say that if any company thinks to spend the money through some implementing agency, then one form CSR1 is to be registered, and the company has to be registered, that implementing agency has to be registered, and the CSR1 has to be filed. And that CSR1 has a mandatory requirement to attestation by a chartered accountant. So this is the first thing which has come statutorily in the institute, where the opportunity has knocked down our profession. But apart from this, if we talk about the VRSR, that is a compulsory reporting for the 1,000 companies by the SEBI. So there is a big opportunity for us. If we talk about the CSR reporting, which Dr. K.K. Upadhyay will take today, he will explain the reporting part of the CSR. So I think you will find a great opportunity for our profession in this field. And friends, if you go through the SDGs, Sustainable Development Goals, as declared by UN in 2015, and just to make the world better to live by up to 2030. So if you will go through those provisions, those Sustainable Development Goals, then you will find that yes, there are bigger opportunities for our profession, because all things, all statutes, all procedures, all reporting cannot be completed without the intervention of the chartered accountants. So friend, this is a big thing for us. I don't want to take much of your time, because we want to hear Dr. Upadhyay, and he has a lot with him, because as rightly introduced by Sonali Madam, he has a vast experience of the corporates. He has vast experience of CSR activities. He has vast experience of other corporate processing and procedures. So I think he has a lot in his, with him to tell us. So I don't want to take much of your time. I just want to wish you a very good learning, a very good session, very good technical session. And I hope that you will give your love and affection to the CSR committee, and you will take part in all the seminars, all the weekly seminars which we have arranged for you. And I would also like to urge upon you friends, that this year we have taken a pledge that we want to plant at least 10 lakh trees throughout the country, with all the chartered accountants, with all the students of the CA. Friends, believe me that we have started very good, and all the chartered accountants started planting tree, at least one tree by every chartered accountant. And for this project, we have just geared up as a ISR also, individual social responsibility. And friends, by adopting ISR, what you can do, you can plant a tree, but you will have to take a pledge that you will take care of that tree at least for 3 years, and you will have to send that photo of the tree planting by you along with 3 lines to the csr.isr@ICAI.in. You mail it on this mail address. We will take care of it. We will give you a certificate also for this noble cause. And friends, by cumulatively whatever we achieve this year, I think we will give a very good message to the society, very good message to the government. And apart from the message, we will favor the environment, we will improve our own living, and we will improve the oxygen levels of the for the public at large. So friends, I urge upon you that kindly आज एक प्लेज ले आप लोग कि हम एक पेड़ उगाएंगे, मिनिमम एक पेड़, और उसको 3 साल तक संभालेंगे, और उसकी रिपोर्टिंग csr.isr@ICAI.in पर मेल करके करेंगे. And I believe me friends, by your this action, you will do a very important cause, a better cause for the nation, for the environment, and for the society at large. So thank you very much, friend. Thanks a lot. Over to Sonali madam for the next proceeding. So Sonali ji.
Thank you, sir, and thank you for your welcome address. As rightly said, social responsibility is not only for the corporates but for the individuals also, and we should start with ourselves first and look after the society. And as many of you have seen in 2 days back, there were news that 366 corporates have been prosecuted for not following CSR norms, CSR rules and regulations. So this is becoming very important, and I request Dr. KK Upadhyay to kindly take up the session and introduce the members to what is required from us for CSR reporting. Dr. KK Upadhyay, please.
Thank you, Sonali ji. Thanks a lot, CA Satish Gupta ji, for such a nice introduction and giving me this chance. Practically, I am a student of CSR. I've been working in this field for long. I have seen all along when we started Wellman. And when we in the FICCI, we were the first one to introduce a CSR award about 19 years back. And I've seen this whole thing developing into a storm, and now almost a compliance. I will share my screen with you. You can ask question anytime. And maybe we'll take around a 5-minute break. Around 3. First of all, when we say this is what I'll be covering, I'll give you a broad overview. Just I will touch 2-3 things. First is a triple bottom line, Csr Pyramid, and Dr. Michael Hopkins. I will briefly talk about Company Act 2013. Then CSR in 2021. Then I will move from BRR to BRSR, Sustainable Development Goals, and India Dashboard, as Satish just said. You call it by any name. It means almost the same thing. Call it corporate responsibility, corporate accountability, corporate ethics, corporate citizenship, sustainability, stewardship, triple bottom line, or responsible business, as just now Satish mentioned. Basically, what we are talking about in a broad sense is corporate social responsibility. Corporate social responsibility has many definitions, but I find UNIDO definition very close to. CSR is generally understood as the way through which a company achieves a balance of economic, environment, and social imperatives. That's what we call triple bottom line. While at the same time, addressing the expectations of shareholders and stakeholders. 3 words: economic, environment, and social. I'll be referring them again and again. Why we are talking about CSR? Mahatma Gandhi said, the world has enough for everyone's need. The world has enough for everyone's need, but not enough for everybody's greed. That's where the problem is. We are growing. Our economy is geared above all to achieve growth. Whereas we were this much 1950, by 2010 we were this much, And by 2050 will be almost 3 times of this and almost 15 times of this, of 1950. The question which we generally ask is, what is this development? What is this prosperity? And what is this progress? It's very difficult to understand it. Urbanization. People are moving from rural area to urban area. Urban area is becoming more important. 1900, rather 1800, just 3% people used to live in towns. 1900, 15%. By 1950, 30%. By 2045 and by 2050, almost 70%. This is a phenomenon in India also. By 2030, almost 50% will be urban population. It's still there in states like Maharashtra, where 50% is urbanization. This creates new type of problem, new type of ecosystem. As we lot of times talk about climate change, as we are seeing these days, it's a monsoon. But what we talk about? We talk more about floods, landslides. Even hills are not safe. If hills are not safe, plane is not safe, then where do we go? If there's a plane, I will just like to ask you a question. If it would have been a physical session, I would ask you, raise your hand. Will you fly such a plane, which looks like more like a car? Answer is no. A plane has to be like this, and plane has to be complex. Same is case with CSR also. It's complex, it's complicated, it's compulsory. It's a matter of compliance now. And to great extent, it's confused also. Because at this point of time, we are not able to answer a lot of questions. A simple question, like say, impact assessment is compliance now. There's a whole school of thought which thinks impact is not achieved in 1 year. Or as now, in 3 years, you don't reach to impact. So how do you measure it really? Are we still talking about social audit? Social return on investment? Or what is this impact assessment? There are plenty of questions which are still unanswered. That's why I call this CSR as 4 C's. Complex, complicated, compulsory, and confused. When I was going through the literature, I found that there have been 4 stages of industrial revolution. I've written a book called CSR 4.0, where we talk about a period up to 1914, when India was called Sone ki Chiriya. What it means? It means we had 34% of world trade. It was mostly textile, spices. We were the best. Our products were the best in the world. Then came the whole theory of trusteeship. Mahatma Gandhi said that you are trustee of the wealth. This wealth doesn't belong to you. And with the third Indian industrial revolution, things started changing. Liberation came. We had to find a lot of answers to a lot of things which we do. PSU started working for the people. The idea of PSU was to work for the community, to work for the people, to work for the nation. Then I'll be talking about 2014 onwards. The basic question at the heart of CSR, as old as business itself. When business started, CSR started. CSR has been around for a long time. Take a place like Jamshedpur. It was just a small village. When they started, Tata started factory, they had employees. When they had employees, they had to look after their health. They started a dispensary. They had to look after their children, their education. They started school. Then they saw the gap between the have and have-nots. That's where they started CSR, working with the community to reduce that gap. The original aim of CSR was employees healthier and more productive. They were concerned about productivity. If an employee falls sick, they lose man days. And that's what was all about philanthropy. And philanthropy still continues all over the world. These are estimates how companies contribute, right from Jamshedji Tata, the Tata Group, to Warren Buffett, Hans Wilsdorf, J.K. Lilly, Bill and Melinda Gates, all are contributing different causes from healthcare to human rights. As an Indian, I'm proud that on the top is Jamshedji Tata, the Tata Group, top philanthropist of 20th century. I'm proud he's Indian. And lot of Indians. Bill Gates has given 50% as well, Warren Buffett 78%. Similarly, Ajim Premji, Shiv Nadar, all are contributing towards. That's what Satish were referring as individual personal responsibility, IPR. Premji is donating almost 22 crores a day. It's a phenomenon all over the world. I will just like to tell you a quote from Milton Friedman. He said, the business of business is business. The only responsibility of business toward the society is maximization of profits. To the shareholders, within the legal framework and the ethical customs of the country, what CSR means.
Global warming, diminuted natural resources, the extinction of various animal and plant species, global population increase, and migration. Amongst others, these are some of the real environmental and social issues we face today. How can we address these issues whilst ensuring food, education, and health for all? How can we ensure that economic development and technological progress benefit the greatest number of people? Faced with these challenges, a more sustainable developmental approach becomes necessary. This requires the commitment of all international organizations, governments, associations, companies, citizens. Everyone is concerned. And in practice, what can a company do? The overall goal is to combine economic progress, social justice, and environmental preservation. Based on its corporate social responsibility, a company can ensure that its economic growth is beneficial to everyone: its suppliers, employees, customers, the local population, in short, all its stakeholders, whilst minimizing its impact on the planet. Depending on the sector of activity, the specific issues and challenges differ from company to company. Let's take a pharmaceutical company. It can act responsibly in many ways. For example, offer to as many people as possible safe and quality medicines, take into account the needs of patients by supporting them throughout their healthcare. And for all companies, being responsible also means taking care of its employees and ensuring their safety at work. It also means being compliant with the application of the various laws and regulations, as well as defining ethical business practices. It also means reducing the environmental impacts of its production sites and choosing less polluting modes of transport. Thus, the ambition for a responsible company is to contribute to an economically efficient, socially equitable, and environmentally sustainable development, whilst ensuring its profitability and economic growth. As such, corporate social responsibility, CSR, is now recognised as a real performance driver, particularly because it encourages innovation, reduces costs, and brings employees together around a meaningful project. Within our daily activities, both individually or collectively, we can all be part of this evolution, and that's what's really inspiring. And at Servier, CS...
That's what we mean. It's a program, it's a revolution. Before I move ahead, I would like to give few words. I'd just like to share a few words with you. The first one is triple bottom line, which came from John Elkington. I had pleasure working with him. It says 3 P's: planet, people, and profit. They have to work together when we talk about a real, profitable, good business. I'll just play it for a few minutes.
You've probably heard about the triple bottom line, a concept that is used a lot when speaking about sustainability, and particularly sustainability in business. John Elkington, a global authority on corporate responsibility and sustainability, coined the phrase in a book in 1997. His argument was that the methods by which companies measure value should include not only a financial bottom line, profit or loss, but a social and environmental one as well. The concept has evolved into one that's often described as 3 overlapping circles. You've probably seen this image before. Sustainability is typically defined as the place where economy, social realities, and environmental health overlap. The concept of the triple bottom line mainstreamed the idea of sustainability as including people, planet, and profit. It helped business to understand that long-term sustainability of an organization required more than just financial equity. It also helped to clarify that when businesses were considering what sustainability meant for them, it didn't mean they had to give up the notion of financial success. But this overlapping circles image of the triple bottom line can convey a lot more. The circles are all the same size. Does this indicate that the economy is the same relative size or value as the other 2 circles, which deal with society and the environment? Can we trade, say, 2 social and 3 environment for 5 economy, as long as we stay in the overlapping bit in the middle, sustainability? Let's see if science can help us understand this better. For more details about this, you've probably heard about the triple bottom line.
Even in India, even our budgets and chamber meetings, government talks about 3 P's: people, planet, profit. This is a cutting from a Hindustan Times. where government, Honorable Prime Minister is talking 3 Ps. 3 Ps means people, planet, profit. When we talk about all three, that's what sustainability is. That's what sustainable development is. What is sustainable development? Sustainable development is, will we leave the earth, our environment as such as we got it, to our next generation? Answer may be yes or no. But
our planet isn't in good shape. Currently, we are using the resources of 1.5 planets. Make that 2.5 if everyone was living by European standards, 4 if we were all Americans, and even worse, studies conclude that we've crossed several of 9 planetary boundaries that are necessary for a safe and sustainable life. We want to ask, how can companies and corporations foster sustainable development? What is true business sustainability that helps overcome society's long-term problems? Business and sustainability? That doesn't go together. Yep, that's what the traditional economic paradigm preaches. The business of business is business. The American economist Milton Friedman once said, only economic concerns like turnover, profit, market share, or shareholder value matter. Societal or ecological concerns mustn't distract private companies. That's what the government is for. We call this approach Business Sustainability 0.0. Jack Welch was a prominent advocate of this traditional model. As CEO of General Electric, he measured everything in terms of shareholder value. Neutron Jack laid off tens of thousands of employees and was widely admired and celebrated for his economic success. So how does sustainability enter the world of business? What role does it play there? In the first phase of business sustainability, companies react to social and ecological concerns. Economic objectives, however, remain the only priority. They just recognize that sustainability management may help them save costs, reduce risks, improve their attractiveness as an employer, and differentiate themselves from their nasty competitors. Sustainability management is all about managing the chances and risks that stem from economic, ecological, and social chances issues. And yes, that's where most companies are today, on the level of business sustainability 1.0, also called a refined shareholder value management. Sustainability as a means to an end, the end being economic success. A good example for this is Walmart, the world's largest retailer. Its sustainability strategy focuses on reducing things: energy, water, packaging materials, and transport routes, which...
That's what it is all about. But why sustainability? Why these things? Why CSR is important? I always ask that question. When I went through the literature, I found a lot of examples. When I look back 100 years, I find only 100 companies were there, only 25% remain now. Where have these companies vanished? In some cases, it was technology, but at a lot of cases, it was also how they did their business. Let me have a small example. Volkswagen, a German automobile manufacturer, established in 1946, third largest, who made first people's car. People car means as we had Maruti 800 in India. They have been through a problem of emission scandal, where they had a lot of problems. People talked about their ethics, dishonesty, and lack of responsibility. They said it's a duty, ethics. It was failure of ethics, huge amount of pollution and recall of cars.
Once the world's top automaker, Volkswagen has fallen to number 2. One reason, the company admits it rigged 11 million vehicles worldwide to cheat on emissions tests. Here's a breakdown of the scandal, blow by blow. A group of scientists at West Virginia University discovered that Volkswagen was using software in its diesel cars to cheat on clean air tests. The software detects when the car is being tested. The engine then runs differently, making emissions seem cleaner than they ordinarily are. They find emissions are up to 40 times higher than legal limits, but the company repeatedly denies the claims to U.S. officials. The U.S. Environmental Protection Agency announces that Volkswagen was manipulating its diesel cars to score better on emissions tests. Volkswagen admits rigging 500,000 cars in the U.S. to work around emission laws, but the company's problems are bigger than that. It admits the problem is global in scale, affecting 11 million cars worldwide. Amid calls to fix the affected vehicles, VW halts the sale of diesel cars in the U.S. CEO Martin Winterkorn apologizes and resigns. He's replaced by Matthias Müller, the head of VW's Porsche brand. Meanwhile, Volkswagen is hit by endless lawsuits from customers upset that their cars have lost value because of the software. Volkswagen's German headquarters are raided by police in search of incriminating documents as German prosecutors investigate. Volkswagen says they are cooperating, and anyone involved will face the full consequences. Days later, the French and Italian offices are also raided. Plans are announced to start recalling the 8.5 million affected cars across Europe. The company says they will be fixed by the end of 2016. VW cedes its recently won title of world's top automaker to Toyota. Michael Horn, head of Volkswagen in the U.S., testifies to U.S. lawmakers, blaming the scandal on a few engineers. Senior management was not involved, he says. After months of apologizing, VW decides it's time to pay up. The company forks over $500 each to owners of affected cars in the U.S. The gesture cost Volkswagen $250 million, but for some customers, it's no longer enough. They demand a buyback of the rigged vehicles. 9 managers suspected of involvement in the scandal are suspended by the company. Volkswagen says it will set up a fund to compensate owners, tapping mediator Ken Feinberg to decide how much each should get. Another exec is out. This time it's Michael Horn, CEO of Volkswagen Group of America. He resigns. Volkswagen reaches a deal to buy back or fix 500,000 U.S. cars involved in the emissions cheat. The company says the price tag for the crisis is double its original estimate. It sets aside about $18 billion to deal with the cost of the scandal. VW agrees to pay up to $14.7 billion to settle the issue. That's much more than any other automaker has paid for wrongdoing. Most of that money will go to owners of the affected vehicles. In addition to compensation for lost value, Volkswagen will have to either buy back or fix the cars. But this isn't the end of the story. The company still faces civil and criminal. Once the world's...
That's what happens. That's where I share with you Carroll's CSR Pyramid, which says at the bottom is economic responsibility, be profitable. Then comes legal responsibility, obey the law. Then comes ethical responsibility, be ethical. And then the philanthropic responsibility, be a good corporate citizen. You know, CSR is not just a philanthropy. CSR also gives you a license to operate. In India, respected companies like Tata's, Birla's, ITC, all have done a lot of philanthropy. That's why they still exist. They are respected. I was with Michael Hopkins. He is one of the biggest thought leaders in CSR. He says it applies to all the issues from poverty to health services to this pandemic. We saw this in COVID pandemic. The companies had a role. So you cannot just survive on charity or philanthropy. You have to treat your stakeholders responsibly. Whereas initially it was just shareholders, now it's stakeholder. Gradually companies grew in size and cloud. They started playing a big role. And that's where we talk now about stakeholders. All stakeholders, customers, vendors, employees, government, and that's what's called stakeholder theory. We have to take care of all our stakeholders in a better way. That's why I call CSR a bridge. A bridge, what society requires and what society expects, and society and business have to work together. Society needs employment, investment, profits and taxes. Business needs demand, public assets and infrastructure, and legal protection. They are interdependent. They depend on each other. But then why CSR? One fact, population is growing in the world at a very increasing rate. Just see here, from 0 to 2000, how much the population has increased. Most of our problems are due to population. We are not able to solve a lot of problems due to population and the poverty. Poverty has decreased from 55% to 12%. In India also, from 55% to almost 27.6%. But as the population has increased, the numbers are big numbers. When we got our freedom, we were 36 crores. Now we are 136 crores. That's why we have too many poor people when we talk about numbers. 28% may look less, but by size of population, it's a big number. We are 7th largest, one of the growing economies. We are 5th or 7th in the world by the next to US, China, Japan, Germany, France, UK. But in global human development index rankings, we are 130. In gender index, we have slipped by 28 places. On the one hand, on the other hand, 1% of the rich people own 53% of wealth. Even if I talk about 10%, they own 76%. Not only that, riches of richest are going up. In 2018, it went by 18%. Rich is becoming rich. India, globally. We have Iceland of prosperity. There are houses like this, where we talk about environment, we talk about greenery. You can find a lot of greenery on all the floors. Then we talk about the middle class. Then we talk whole area about Dharavi. With high-rise buildings, you have Dharavi, the slum area, world's largest. What we are talking about? We are talking about rich. We are talking about India. We have just won few medals. We are champion in a lot of sports. But there's a Bharat also. There are about 7% people who have a difficult time to meet both the ends. They don't know where to go. There's a lot of poverty. There's a rural-urban divide. There are haves and have-nots. We are trying to be world guru, but at the same time, there are people, especially after pandemic, who have lost their job, who don't have food to eat, though government is giving food to 80 crore people. But still, to few, it doesn't reach. Lot of questions. My question to you, can we continue to do business as usual in societies that fail? Answer is no. No, no, no. Business cannot survive if these conditions continue. So what's the need today? Today we need inclusive growth, corporations as partners in social development, and strengthening the social responsibility of business. You may ask me why. 2019 budget, 20% money came from corporate tax directly. And then, lot through TDS, income tax, and other things. That's why corporate are so important. These are 4 pillars of CSR when we talk: human rights, labor, environment, anti-corruption, ESG, as I said. What it means? It means ensure employee welfare, engage with stakeholders, promote human rights, and support inclusive growth. I have a purpose to you to show this slide. When you talk about the 4, you talk about employee welfare, stakeholders, human rights, inclusive growth. We are talking CSR worldwide. But when I talk about inclusive growth, I'm talking about 2%. That's what we talk about CSR in India. Stacey also mentioned about SDGs. We are talking about by 2030 to achieve SDGs from a pure poor economy, external rule. We have come to rapidly developing economy, new leadership from Indian industry and civil society. By 2030, we aim to be a developed economy. My national transformation. My question to you, can she hope to live in developed India? That's what we try to answer through the Company Act 2013, which had lot of clauses, 400 plus. We talked more about one, clause 135, corporate social responsibility. We started with the 5th 5-year plan, with NVGs, voluntary guidelines on corporate social responsibility, standing committee, report on companies bill. Then we had the NVGs. Then we had 2012 BRR. I'll be coming to that in detail. That's where 2014 is a landmark. What happened? We had Companies Act. We had clause 135 with 5 sub-clauses. We had a Schedule 7, which tells both what activities you can do. And we were the first one to do such a thing. These are the conditions. If any company meets them, they have to do CSR 1920, 21,000 plus companies, 21,000 plus crore rupees were spent on CSR. How to do CSR? You have to make a CSR committee with the independent director. They'll make a policy, they will monitor it. I'll be a little fast here. They have to form a CSR policy. There is a whole guideline now what CSR policy should include. The responsibility lies with the board. They have to form a CSR committee, approve CSR policy, ensure implementation of CSR activities, allocate and give 2%, and disclose on their website. At least 2% of its average net profit made during the 3 immediately preceding years. This is done through a lot of notifications. In February 27th, 2014, we had the CSR policy. Then a lot of additions to it, lot of clarifications. Then Schedule 7. Schedule 7 specifies what activities we can do. Eradicating hunger, promotion of education, gender equality, protection of national heritage, benefits to armed society, armed forces, environment, technology incubators, rural sports, PM Relief Fund, rural development. Then with time, we have added a lot of them. We have added slum area, disaster management, Swachh Bharat, contribution to clean Ganga, technology incubator, corona-related programs, measure for the benefit of para-armed forces, RD for corona, and just last month, corona vaccination. Now you can book vaccination except for employees under CSR. But that's not so important. There's a long list. A short list is what is not CSR. Activities outside India, contribution to political party, R&R, employee welfare, and cosmetic philanthropy. It has to be done in a project mode. This is very important. As a chartered accountant, we must know it cannot be a one-time activity now. You cannot just cut a check and give it. CSR has to be in a project mode. As an MBA student, what it meant to me, it meant need-based assessment baseline, clearly identified time frame, specific annual financial allocation, clear identified milestones, clearly identifiable goals or objectives, and robust and periodic review and monitoring, and evaluation and assessment. That's what comes under reporting. Project mode. Through, they can do it directly, or through implementing agency, a trust society or Section 8 company, or independent organization. They can form an independent trust society or Section 8 company in collaboration with other companies, or any identity established by an act of parliament or a state as per Schedule 7 of the Companies Act, like PM Care Fund. This word is very important here. In reporting, we refer to it in a lot of times. It's called implementing agency. It must be a trust or a society. It must have 12 ATG, must have 3-year track record, except it's your own trust or foundation, and must be registered with the MCA by filing CSR 1 after 1st April 2021. What has happened till now? Let's look back. About 80,000 crores spent, 51% rise in firms covered under CSR rules. At the same time, CSR spends per firm grew 23%. These are the figures. I'll be leaving with you. This year, about 21,000 companies, about 21,000 crore rupees. Where we have spent it? Maharashtra has been in top. Then Karnataka, Gujarat, Tamil Nadu, Odisha. And very little money has gone to UP, Northeast, Bihar, or even in Maharashtra to Vidarbha. These are the paradoxes we are living with at this point of time. Where we have spent it? Education, maximum, 39%, 26% to health, 11% in rural development, 8% on environment. Just for example, I am taking IT sector. About 60% comes from top 5. TCS, Infosys, Wipro, Cognizant, and HCL. About 5,000 crores. They spent around their area. They also say almost same thing. Maximum about 41% on education. And top 5 also spend maximum on education, about 33%. But this year there has been a lot of spending on other central funds, especially PM Care Fund. I'll come to that. Just for example, I'm giving you one of the companies, Wipro. They spent about 50% more than the required. They spent about 151% of prescribed CSR limit. On higher education, 93 crore, renewable energy, 37 crores, COVID relief, 86 crores. This is spending till date. About 20, as I said, it's increasing. There has been a drop this year. That's basically due to COVID. The amount has gone down a little bit. These are the companies. About 1,000 crores by Reliance, TCS 600 plus crore, HDFC Bank 600 plus, Infosys 325 crore, Adani, Tatas, all are complying with that. This year, 2021 has been a milestone. Milestone for 4 reasons according to me. First, comply or pay penalty. Second, PM Care Fund. Third, amendments. And fourth, the changing landscape. 2014, it was comply or explain. Now it's comply or pay penalty. Whereas we started with name and shame in 2014. Idea was if companies don't do it, if they do it, they get a name. If they don't get it, they get the shame. So that's why they will do it. By 29, it was comply or explain. Explain your website, why you are not doing it. Now is comply or you pay penalty. As per the latest law, it's not a criminal case, but it's a civil case. PM Care, it has been in talk, especially with relation to companies and CSR. Private sector about 5,565 crores. Public sector 3,249 crores. And lot of this money was booked under CSR. Overall, out of the 15,000 crores, 7,000, more so in private sector, in the public sector. About 2,000 out of 3,000, about 2,500 in private companies. Out of 12,000, about 6,673 crore. This has a ramification when we talk about NGOs. Money has reduced this year in CSR for NGOs. NGOs have been getting less money. This amendment, 2021, Company CSR Policy Amendment Rule 2021 of Companies Act 2013 on January 22, 2021. It has lot of things. I just tried to list. Prepare an annual action plan, mandatory disclosure of CSR projects on website, capital assets acquisition, carry forward of the expenditure, transfer of unspent amounts to government notified funds, impact assessment, mandatory registration of implementing agencies through CSR1 form, engagement of international organizations for monitoring and evaluation, and for capacity building training, and upgradation in reporting format. Reporting formats have been upgraded. I feel the landscape is changing. There is a regulatory compliance now. It's a multi-year CSR allowed for ongoing projects for up to 3 years. Firms are allowed to spend surplus spending up to 3 years, impact assessment. If their budget is 10 crores or more, unspent funds to be transferred, and non-compliance to incur penalty up to 1 crore on the company and 2 crore per officer. Now, news from 2nd August, 366 companies have been penalized for it. What it means? Why I call it landscape changing? Because now CFO, earlier the report has to be signed by CEO, Chairman CSR Committee, and person specified under the clause. Now, company CFO must certify CSR utilization. He has been made responsible. That's why your role as chartered accountant becomes very important. Because you're not just passing the papers. CFO can have trouble because now he has to certify the CSR expenditure. And CSR reporting, as per the Rule 8, the board's report of company covered under these rules pertaining to financial year, the CSR report has to be part of the annual report. Every company having average CSR obligation of rupees 10 and or under section 135 has to spend 1 crore on impact assessment. They can have admin cost up to 5%. But just remember, logically, this doesn't apply to the project. Project means to the implementing agency. Then they have to display all this on their website, transfer unspent amount to a fund under Schedule 7. It's 3.5. Before we proceed ahead to the formats, we'll take a 5-minute break. So we'll be back at 3:10. which changed this whole scenario. I will like to draw it for you. What has changed and what is going to change in terms of the reporting. This is a major change. First, let me share with you the Business Responsibility Report, BRR. BRR, as per clause F of sub-regulation 2 of regulation 34 of listing regulations, the annual report shall contain a business responsibility report describing the initiatives taken by the listed entity from an environmental, social, and governance perspective in the prescribed form. The forms are given and it has to be part of the annual report. And more so, it has to be part of the, it has to be in the public domain. It must go to the public domain. That's why you can find all BRR reports on the internet. How it evolved. We had national voluntary guidelines on social, environmental, and economic responsibilities of business, NVGs, in 2009. Endorsement of United Nations Guiding Principles on Business and Human Rights by India in 2011 made it mandatory. I think mandatory here is a little tough word. Made it obligatory on part of India to enact NVGs. It was keeping in tune with all the international treaties. We are a member of UN, United Nations. As a member, we are part to a lot of treaty. We do a lot of commitments. As a nation, we are committed for human rights. So 2011, we endorsed UN Guiding Principles on Business and Human Rights. In 2011, MCA releases the National Voluntary Guidelines on the Social, Environmental, and Economic Responsibilities, NVGs. The NVGs provide a framework for BRR to demonstrate compliance with 9 principles, forming the NVGs on apply or explain basis. These 9 principles, please remember, I'll be sharing with you all the 9 principles in their new avatar. 2012, SEBI mandates the top 100 listed companies by market capitalization to include BRRs in their annual reports. SEBI BRR. The SEBI BRR format is based on the framework prescribed under the NVGs. 2016, SEBI extends it to top 500 listed companies by market capitalization. And 2019, we have National Guidelines on Responsible Business Conduct, NGRBC. And 2019, SEBI extends BRR to top 1,000 companies. Started with 100, came to 500, 2019 it's 1,000. What is dividing the framework for BRR? It has section A, general information about organization, industry sector, products and services, markets, other general information. Section B, financial details of organization. paid up capital, turnover, profit, CSR spends. Section C, other details. BR initiatives at subsidiaries and supply chain partners. Please remember, when we talk about stakeholders, we are not talking about the company only. We are also talking about the supply chain. Supply chain becomes very important. Like you might have heard a famous case about Nike. We know it more as a shoe company. So they are more into sports goods. Nike had a big problem. When it was discovered, the problem was at their supply chain, where really the footballs were made. They were made by child labor, which was not acceptable as per the norms. Similarly, H&S, they had a big problem. Problem was in one of the accidents which happened in Bangladesh, where their garments were made, the building collapsed and a lot of people died. That's why when we talk about CSR or we talk about reporting, it's not only the company, it's their suppliers, their supply chain, and their associates. Section D, BR information, structure, governance, policies for business responsibility. Section E, principal-wise performance, indicators to assess performance on the 9 business responsibility principles as envisaged by the NVGs. They have to report on each principle. Annexure 2, they assess the compliance with regard to environmental, social, and governance. Section A, B, C, D, E, and Annexure 2. Then each principle, principle 1 to 9, what they have done, how do they report on it, and all that. Before this, I was showing you a slide on or a video on sustainability. Sustainability is a big issue. We talk a lot about sustainability. And there's a whole formats. There are frameworks for sustainability. I will come in a short while. The SEBI study says, then they started talking about integrated reporting, IR, where they said, let all these reports be at one place. This is called IR. Now, some reported on in IIR plus BRR plus SR, and some on IRR plus SR with BRR mapping. These are the number of companies who have done it differently over the years, right from Ambuja Cement to Bharti Airtel to Dabur to Indices Bank and to Dabur, Titan, how they have reported over the years. Different type of reports which they have done. I'm just sharing with you a report from Reliance because they are the one who spend maximum on CSR. It talks about like Stishi were talking about a tagline, for your individual social responsibility for the tree plantation drive. Similarly, all annual reports, they have a tagline. Tagline for Reliance for this year was Naye India Ka Naya Josh. That year, 1920, they had tagged most of their reports of their different companies around Josh. Please remember one more thing. CSR is done by Reliance Foundation. As a thumb rule, very easy to tell name of the foundation. Company group, Reliance Foundation, Reliance Foundation. You can even go to the extent of chairman, Nita Ambani. Adani Group, Adani Foundation, Niti Adani. Similarly, for most of the companies, at this point of time, about 42% companies, they do CSR through their foundation. 32% of the CSR is implemented through their foundation, and rest by implementing agencies through government programs and others. And the trend is on increase. They feel, because I interact with a lot of them, they feel more comfortable in dealing with their own foundation. You can find this and other BRR reports. What are the 9 NVG principles? Ethics, transparency, and accountability. Product line, well-being of employees, stakeholders, human rights, environment, policy advocacy, inclusive growth, and customer value. Why I am showing this to you? I am showing this to you because the landscape is going to change a bit when I talk about future, when I talk about BRSR. I can share with you my article where I called it sustainability reporting. Because whatever it is, we talk about sustainable development, we talk about sustainability, and to me, it's a journey. We started as whatever they were doing, whether sustainability report or annual report, CSR report, to BRR, now to BRSR. Is there on the web. I've shared the link. What is BRR? It's a tool, a rational why report, which leads to better overall performance and enhanced competition based on apply or explain. And it goes to all the stakeholders with your sustainability efforts. point of time, for top 1000, it talks about company performance, enabling disclosure documents, not a compliance-oriented one. General information it has, as I said, Section A. Section B, financial details. Section C, other details. Section D, PR information. And Section E, principal voice performance. At this point of time, it's mandatory for top 1000. If they don't comply, they have to explain, as I said. Why they are not doing it. It discloses reasons why they didn't do it or they do it. Undertake a process of review. Emphasis is mainly on reporting. Report helps you. Like there are different frameworks. A framework which is very close to our work is ISO 26000. ISO 26000 gives a type of indications in your company where you have problem, what is happening, what is not happening, and then you can do this. You can take corrective action in your company itself. So it's for improvement. First, it builds a team spirit. It helps your companies, different departments to interact with each other. ISO 26000 helps everybody to work on it, be with it. So it improves the company performance. Reduce costs, where you can reduce costs, where you can take corrective actions, where there are problems, how to solve them, if problem with your equipment, problem with your process, problem with your inventory, all those come in for, and then you can take a corrective action. That's why companies go for different frameworks, close to CSR, ISO 26000. Now I come to business responsibility and sustainable reporting. This is called BRSR. We discuss with you why it's so special. What are the qualities of it? Few references. We talked about Schedule 7. We talked about SDGs, Sustainable Development Goal. Sustainable Development Goals are taken care of in India by NITI Aayog, and all government programs now are around SDGs. And lot of companies, they have also adopted it. Lot of their reports, programs, their reports, they talk about SDGs. And there are a lot of companies which provide services in SDGs mapping. I work with ICAI, International Institute of Corporate Sustainability and Reporting. They work on SDGs and then do a mapping, understanding where does the company stand, what they are doing on it. As you know, there are 17 SDGs. And I discussed with you Schedule 7 activities. Lot of them I did now. These are different SDGs, and these are the activities as per Schedule 7. That's why in Schedule 7, if you even see the wording, a word like eradicating hunger, it comes from SDGs, promoting education, promoting gender equality. These are the SDGs which refer to that. Ensure environmental sustainability, protect national heritage, measure the benefit to armed forces, training to promote rural sports, contribute to PMNRF, and rural development. Rural development refers to all these SDGs. We have a reports prepared by Global Compact Network India, which compares all the activities during COVID in terms of SDGs and Schedule 7. That report gives each activity wise during COVID time, how they are linked to each other and how do they work. As you know, United Nations Global Compact, it has 10 principles which are around human rights, to support and respect the protection of internationally proclaimed human rights, not be complacent in human rights, 4 around labor, uphold the freedom of association and the effective recognition of the right to collaborate bargaining, support the elimination of all forms of forced and compulsory labor, support the effective abolition of child labor, support the elimination of discrimination in respect of employment occupation. See, labor becomes very important. We had training from CSR from CBI Netherlands. We were with them for almost 6 months. What we were trying to do? We were trying to link Indian companies to the markets in Europe. One of the basic problems we saw was child labor. Because lot of products, especially we identified a big problem with handicrafts. In handicrafts with carpet, because child labor can make better carpets. So the best carpets are made by child labor. But when you export them, when they go to EU, they need a certificate from you that this carpet doesn't use child labor. So we learned it's not only important when you talk about export to know about your country law, it's also very important to know international law. Then about environment. Environment is a big issue, 3 of them. Support a precautionary approach to environmental challenges, undertake initiative to promote greater environmental responsibility, encourage the development and diffusion of environmentally friendly technologies. Then one very important, where at least in India, Global Compact Network works a lot on anti-corruption, work against corruption and its all forms, including extortion and bribery. This comes under ethics. And we have a lot of program with Global Compact Network India on anti-corruption. And a lot of companies started, like Siemens, they started working on anti-corruption because they themselves had a big problem. At one time, company was almost on the verge of closing. because lot of corruption charges were detected against them. When it comes to environment, I can give you example of Coca-Cola. Coca-Cola had lot of problems. Why? Because they were using the groundwater. There was depletion of groundwater plus and think tank, an NGO, Center for Social Environment, CSE, made it public that they have pesticide in Coca-Cola. Now Coca-Cola was having very big problem. It took years for Coca-Cola to come out of this problem. How they did it? It was through reporting. They went for sustainability reporting. They went for other sort of reporting, and reporting helps in PR, public relations. Coca-Cola at this time of is one of the biggest funders of water, environment and other projects, and they are doing a good business at this point of time. And this is true about lot of companies. Now here we are relating these to 10 SDGs to 10 principles. They form a base for reporting. Direct, when you go for global reporting initiative, GRI reporting, IR, integrated reporting, sustainability reporting, the format, the framework has been designed with SDGs, NGRBS, NGP, and GRI. These all were taken. If you go initially when we started CSR in 2014, before in 2013, if you see all the documents, you will find a reference to shared value. They were talking about shared value. But later on we talked about BRR. Initially trainings we went through the World Bank and all organized for us on shared value and somewhere where we have picked up a lot of things, we have dropped a lot of things on the way. But at this point of time, when we are talking about BRSR, we are taking into consideration Sustainable Development Goals, United Nations Global Compact, Global Reporting Initiatives, and NGRBC. Here I'm showing you what all it means. It means UNGC, GRI, the IR, ISO 26000. Just for your information, in India, Bureau of Indian Standards also has 2 standards now. BIS 26001 and 26002. Here we are going to give stars to companies who perform well on them, best, star 5. And for this we need auditors. And chartered accountants can be auditors for this. Training will be provided. Auditors will be certified. And they can charge a fee for doing this audit. And then in the market, we will be evaluating CSRs on stars, how many stars they have. 1 means okay, 3 means good, 5 means excellent. Whereas 26,000 is a guiding principle, 26,001 is a certifiable one. So here, there are a lot of opportunities for CAs and others professionals. There are plenty of frameworks. I just try to list them. There are 4 types of frameworks. multilateral development agencies and international bodies like SDGs, ESG toolkits, frameworks introduced by global investing community. Investing community gives a lot of it on. And ESG is a buzzword now. People talk about ESG evaluation, a lot of companies do it. There's a impact reporting, IMP. Then there are frameworks designed by NPOs, not for profit organizations, like Guildstar. Then there are accounting, quality assurance or control standards. Like I said, SA 8000, ISO 26000. This is for your information. There are different frameworks available for reporting. We had a committee on business responsibility reporting, BRR, in 2018. In 18th August 2020, they submitted their report. This is a link for the report. It recommends Business Responsibility and Sustainability Report, BRSR, in two forms, a comprehensive and a light one. How do they differ? BRR applicable to 1000, BRSR is in a phased manner. It has enhanced the reporting. Reporting is done through annual reports. Reporting is to be done twice now. One on the MCA portal, MCA 21, and another on the annual report. We are talking about two versions, a light and a comprehensive one. This year, it's not mandatory. From next financial year, it's mandatory. This year is voluntary. BRSR. What have we done? We have moved from NVGs to NGRBC, National Guidelines on Responsible Business Conduct, from 2012 on March 15, 2019. These are the 9 principles. Business should run with integrity, ethics. I'll come to them one by one. This is the relation between these and the SDGs. I've tried to compare which one, all the 9 principles, how they relate to SDGs, then also OECD principles, which especially, as I told you, when you go to Europe and other countries, they become very important. Business has not only profit motive. CSR is equal to corporate citizenship. That's why for G20, OECD principles becomes very important when you do business with them, and alignment with ESG. Right from 3R practices to anti-bribery and others. What is BRSR overview? Disclosures under Section A, General Disclosures. Section B, Management and Process Disclosures. Section C, Principle-wise Performance Disclosure. Here there are 3 sections. And third is principle-wise. From where this principle comes? They come from NGRBC. These 9 principles I try to report here, each principle wise. There is a catch here. Some are essential, compulsory, some are leadership indicators. They are voluntary. You may do, you have to do the compulsory ones. But for leadership indicators, they are voluntary. These are guiding principles which are given in section A. These are the type of disclosures. Top 3 products, plant office location, employee workman detail. There's a whole lot of information which you have to give for section A, the general disclosures. Here I have tried to list all those information which you require. To the extent employees on classification basis, their gender, time basis, ability, hope they are not disabled, female representation. Section B, management and disclosures. Prepare a policy, setting goals. First, design a principle 1. Business should conduct and govern themselves with integrity and in a manner that is transparent and accountable. Train, do trainings, engage speakers. Anti-bribery and anti-corruption is one of the major policy. Total number of percentage of governance body members, total number of percentage of governance body members, confirmed incidents of corruption, all have to be covered here under anti-corruption. There's a lot of compliance and reporting under it. Principle 2. Business should provide goods and services in a manner that is sustainable and safe. Safety is a big issue here. How you monitor it, how you supply chain, sustainable sourcing. As I said, your supply chain, your suppliers, and whosoever works for your brand, they all become very important. We have a life cycle assessment approach: goal and scope, inventory, impact assessment, and interpretation phase. And this information has to be given. Principle 2, R&D capex, sourcing, useful use of recycled and other products. Business should respect and promote well-being of employees, including those of their value chain. There are different laws which I have insisted here. You have to follow all these laws, right from the Code on Wages to the Industrial Relations Code 2020. That's what they keep on passing in Rajya Sabha and Lok Sabha. That's how they become law. And when President signs, they become act. Principle 3, these are the type of information you need. Payment of minimum wages to association unions. Principle 4, businesses should respect the interest of and be responsible to all stakeholders. Stakeholders is a very important. All the information about stakeholders. As per GRI 1023, GRI has a different series. These are the documents under that series, which talks about shareholders and others. This talks about companies will have to ensure the following: a policy to ascertain human rights, how much training you have given, how much remuneration, salary, wages, number of human rights complaints, all you have to report. Principle 6, businesses should respect and make efforts to protect and restore the environment. Environment with time is becoming very important, like the carbon credits, and reporting on it becomes very important. One word which you must take from here is environmental impact assessment. This is done to assess your impact on the environment. Successful EIA will require the following reporting. These are the type of reportings you have to do for it. And it's very important. Some of them is also by law. These are air quality emissions, solid waste management, carbon emission, what percentage of renewable. Principle 7, businesses when engaging in influencing public and regulatory policy should do so in a manner that is responsible and transparent. Transparency and accountability is becoming a principle now. What you have to tell, affiliation with chambers and associations like FICCI, CII, PSD, SHM, and others. There are plenty of chambers, energy and water consumption details. You have to give all of them. Principle 8, business should promote inclusive growth and equitable development, CSR beneficiaries. Principle 9, businesses should engage with and provide value to their customer in a responsible manner. What percentage of products carry information, number of consumer complaints. This is whole plethora of information, the qualitative data and quantitative data, which you have to give for reporting. It's a very comprehensive process. SEBI has put it on their website. I'm giving you the link. Go there. You find BRSR there. The notification, the whole link, go to a next one. When you click this, go to a next one here. You find a next one. It's a long document, I think about 39 pages. Where from section 1, as I said, all the information you have to give. This is the format. And when you go here, go to Annex 2, click it, you find Annex 2. Annex 2 gives guidance note for business sustainability reporting. I think I'll stop here. I'll stop here. If any questions, I don't find any in chat box.
Thank you, sir, for your wonderful session and very comprehensive. I think we have covered a lot in this short while. There are a few queries. We can take it up one by one. Am I audible? Hello?
Yes, ma'am.
Okay. So the first query
Yes,
is,
but little voice is taking.
The first query is, what are the important points to be taken care while finalizing the accounts of a private limited company with regard to CSR, to whom it is applicable? Hello? Hello?
Very complex.
I think there is some network issue.
Yes, I think there's.
Now we can hear you, sir. Did you get my question?
Sure. Yeah, I got the question. It's a complex and a lot of reporting has to be done, one which even chartered accountants can do. Can we go to the next?
The next question is, in case a company did not spend the CSR liability for financial year 18-19 and 19-20, which provision applies to the unspent amount? The old CSR provisions or the new CSR rules?
This year, to the best of my knowledge, new CSR rules apply because
For 19-20, yes.
they have come in force from yes. But as I told you, BRSR is from next year, mandatory.
Yes, sir. This is relating to the spend of CSR liability, so I think it will this rules will be applicable since it's already applicable from January 22nd January. So
yes.
it will be. Next question is, my CSR Section 8 company is incorporated during May 21 and it does not have Section 12A and ATG registration. Can we file CSR 1 return?
To have 12A and ATG. And MCA1 registration, when you go for it, they ask for these documents. So technically, they have to have 12A and ATG.
Okay.
But there's still a frequently asked question. This has been asked for clarification. Still, we have not.
Okay, so the next question is, will BRSR report and integrated reporting be required from 2021 or can they be combined into one report?
Received a clarification.
Hello?
Especially in regard to the Section 8. Sonali ji, can you repeat it?
The question is, will BRSR report and integrated reporting be required from 2021 or can they be combined into one report?
As I explained to you, you can derive BRSR from the integrated reporting. Now, what we have tried, we have to try to merge them all. So, BRSR can be derived from integrated reporting. Integrated reporting is not mandatory, but BRSR is mandatory. It's a matter of compliance from next financial year. This year it's voluntary.
Next question is, suppose one company has given rupees 1 crore to an implementing agency on 1st March 2021 and project is expected to be completed within next 11 months. Whether this is to be considered as an ongoing project or other than ongoing project. Second question is whether implementing agency can complete the project within 11 months or can the company have to transfer unspent CSR account within 30 days by considering ongoing project or by considering it as a other than ongoing project and have to transfer in specified fund as per Schedule 7.
Please note one thing. Yeah.
Sir, please carry on.
Please note one thing. The approval has to come from the board of directors, basically through the CSR committee. Technically, there should be no unspent amount with the company and also with the NGO. But you can always convert it. It will be considered an ongoing project. And you can always put money which is left on 31st March in an unspent account and spend it later on the ongoing project. But please note one thing. If you don't spend this for 3 years, it will go to a fund specified under Schedule 7. It's a matter of interpretation and approval of your board.
Okay, sir. The next question is BRSR disclosure mandatory for private limited companies from 22-23 financial year?
For listed companies, yes. as per the SEBI guidelines, and more can be found on the SEBI website.
This is for private limited companies.
Sorry, I'm not an expert on that. Listed companies, yes, I know.
The next question is, please tell us about light and comprehensive disclosures.
This is what is there on the website now. And since this is from next year, so a lot of work needs to be done. Till this year, we have BRRs, and I think soon we will get it. So it's a matter under progress.
The next question is, we have a Section 8 company but did not get ATG and 12A registration in 2021. We got it in 21-22 only. So if the members of the Section 8 company made contribution in 2021, can these be considered as CSR spend to the companies which made it made to Section 8 company?
It depends a lot whether it's company floated by the corporate, or is it something like a NGO. A lot will depend on that. But when you go from 1st April 2021, you need 12A and ATG. That's what MCA 1 form is all about. Thank you.
There's another question. This is basically relating to practice. How can CAs get into sustainability consulting? Mostly people from science or MBA background are preferred for this role. With skills and qualifications one must have being a CA to become a sustainable consultant or a researcher?
A difficult question, but companies like that.
I think no further qualifications are required for this. This is.
I was just about to give example of KPMG, GT, the top 5.
There is some connection error, I think. Hello. I think there's some connection issue at Dr. Upadhyay's end. He has logged out. So we can close the session. We have no further questions also. We can close the session here. And thank you everyone for joining us for this very important session on CSR reporting. And we look forward for you joining us on the next Saturday at 2 o'clock. So thank you everyone. Thank you.